All right, guys, so here we are again. I love it. I've got two things that I want to talk to you about today that I consider to be extraordinarily important. And that is that traders, we have been dealing with a very unprecedented market. And I will tell you that I have not seen what I've seen in the current market environment for the last 20 years. I can remember it like yesterday, but it was a long time ago. I haven't seen the likes of what is happening and has been happening. I haven't seen the likes of that since the internet boom during 1999 into 2000. And I'll be very honest with you. It's causing me personally some problems. It's causing me problems with some of my losses being larger than normal. And it's causing trouble with me in missed opportunities. And so whenever something is throwing me, I consider it an extraordinary opportunity to teach you something very, very powerful, because very few things throw me. Okay? So are you ready? Are you ready? So make sure everybody's ready. Okay, cool. Good. Look, I want you to give me a few answers here. If a stock, boom, drops hard off the open, right? This is the first bar of the open. Boom! And it's under the moving averages. So it's under the Fab 4. It's in negative territory. If this is strong enough, what do you think I'm going to be doing? A few of you let me know. All of you is not necessary, but a few of you let me know. And I'm going to short it. I'm going to go right into this violence, right? Then if you know anything about my style, what else am I going to do immediately after? That's right. Philip's got it. So after I'm in initially, what am I going to do next? I'm going to throw orders above me. Boom, boom, boom. Okay? Now, normally, if there is a bounce, I will get more short. Boom! And more short. Boom! In most cases, it's one or two levels, and then a very high percentage of the time, the secondary drop comes. That is my bread and butter in the markets, traders. That is what I do extraordinarily well. That is how I've built a big part of my trading career. But every now and then, there's a market environment that throws everything off. That makes almost these solid fat red bars buy opportunities instead of short opportunities. And that's the environment we're finding ourselves in today. It's that crazy that something that has an 80+% accuracy rate has now like a 12% accuracy rate. And it has caused me some trouble. I have to be honest with that. Take a look at PayPal. Look at your Fab 4. Look at the power of the bar. Now, I'm sure, because of what I've taught you, many traders have went short in an anticipatory way in that bar. And if they try to mimic me and throw some orders above, they got into some serious trouble because of this. The entire trouble was erased. The entire trouble was erased. So look. You've got this drop here. Now you got to go all the way down to the bottom, right? That's the bottom. That's the drop. You got to start from the top of where it started to drop. Now here's your fat redness. But it starts going up from here, so you got to start your up green from there as well. And combine it all the way to the top, because that's where it went. Now combine that. Now you've got a brand new situation. And this has been happening with a very high degree of frequency when it's not supposed to. And so it flies in the face of a lot of things. It flies in the face of one of the most solid things I've taught you. Dive into violence, especially violence in the right position. Now, has it gone 100% out of the window now? No. But it's different now, right now. And it has been for a bit. All right? Now, here's something very important to understand. Once you have something like this, the green eliminating the red, you can't rely on what happened here anymore. So I had some traders this morning trying to short this. Boom, red takes out green. Wrong. Red takes out green here. Wrong. Because now you're fighting this. And in this market environment, this has a hard time penetrating after this. It's just that the buying is just ridiculous right now. That any major drop is looked at as just pile in. This, under normal circumstances, would have an 87% follow-through rate. Look. So we are in very, very special times. And I haven't seen this. I haven't seen virtually everything get the capability of doing this to wipe out former violet trouble like it doesn't even exist. Now, it's always been present in the market, that ability, but it's very infrequent. It's when you spot it, it's like, wow, that's odd. But now it's not odd. All right. Take a look at JPM. Let's go back to yesterday. This one worked, but let's go back to yesterday. JPM yesterday. Look at this. Look at this. Traders, that is not normal. Can it happen? Obviously. Has it happened? Of course, but not regularly. Now it's regular. Now, think about this. Let's go back to this. I took the short in JD. And my God, I covered right at the low. Right at the low. All right, it's a nice drop. Not quite $1, but you know, it's an okay drop. All right. Now you would think that, look, you've got this. Look, here's a Fab 4. You got the overhead 20. You got the declining. You got the overhead 200. You got the declining 20, and you've got this to shoot. You've got this to contend with. So let's connect the gap. You got this, and let's even join yesterday. So you got this move down starting from late day yesterday, right? So you've got this move down to contend with. You've got the top of the Fab 4 here. You've got the 20-period moving average and the overhead 200 now. So this is the move. So you got to think that a bounce up into this range would have some trouble or a stall at the most. All right. Why? Because people who bought late day yesterday around 104, almost 105, betting on a gap up, get a gap down and a move further. Some of them hold on, which is probably the right thing to do in this kind of market environment. And instead of selling because of this trouble, they're actually waiting for the green to happen to start buying again, not selling. So that it's off now. The psychology of the market is off now. It's buy on deep declines no matter what, and don't sell. Now, someone's selling, obviously, but I'm talking about in mass. And so this is what is happening with greater and greater frequency. That nothing to the left is mattering more often. All right. Now, normally, we would not be looking to buy here unless this is deep enough. All right. You got this. You got the overhead 200. You figure that, you know, a bounce might do something like that in normal days. Are professional fund managers smart? Not buy at the highs? No, not at all. Not at all. Don't think professional. They're part of the idiot crew as well. All right. Okay, now I want to give you, if we take a look at JD today, I think it's easier for me to just start all over. It worked. Violence worked today. So I get into JD short. And there's that 87% follow through working now. Now, this is down. Now look at the move up. Not like yesterday. It's moving up, but this is more normal today. Now look at the difference. Look at the move up here. And let's go back to yesterday again and look at the move up. What's the difference? We're just talking about move ups after a good move down. You see the difference? Look at the bars. Look at these bars. Now, let's go back to today and look at these bars. See the difference? Got it? Smaller, more controlled. All right. Now, let's once again go back to yesterday, because this is going to be the key. It's going to be the key to not getting yourself in trouble, and maybe even profiting from this turning it into a profit capability. Look at how the bars, look at the size and look at how they close. Boom. Tiny tail. Boom. Almost invisible tail. Almost invisible tail. Tiny tail. No tail. Tiny tail. Boom. These are the highest quality bars. I couldn't draw these bars better for one of my teaching sessions. My bars, when I draw them, are sloppier than these bars. Like I draw it like this. Look at that part right there. Like I can't even draw I can't even draw one as perfectly as these bars. That's how perfect they are. That's how solid. That's how picture perfect and powerfully strong. They can't even come a little off the high. So I'm telling you that this is a key. If you got a stock that has dropped in today's market environment, boom, 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 boom. See, under normal circumstances, I'd be saying this thing, if we move back up and you get this, boom, that's a short again for a new low. But if you get this, boom, boom, it's not happening. Boom, boom. The quality from the top is just so, it's like almost just ignore this now. Just pretend like this is your open. That's your open. That's the first bar. Do you understand this quality, strong ranking of bars? Do you understand this? Very important today. You got it? Beautiful. Microsoft. Okay. I don't want to get distracted, guys, but so why was it different today? No bars to judge. You get one little in comparison and little. You don't get that boom, boom. You see? So this is more normal. This is very important. The second thing about this I want you to understand is, let's go to, can we go to PayPal? The first bar off the low is also a key. if that's a strong, high power move, guys, I'm missing opportunities here. But if that's a strong, high power move, off the low, quality ending, and powerful, you're going higher. That first bar is a very, very important key. So what I'm saying to you is if you're short here in this bar and you get, and I would normally not be afraid of a move back up, but if the move back up starts with a quality bar, you're probably in trouble today. Like your stop could be up here. I am telling you that it's probably going to get there. Now, this might, as I'm explaining it to you today, we might go back to normal next week. I don't know, but I'm just telling you that this has been the scenario with a high degree of frequency. And that if you start to judge the first bar move back up and judge the quality of all the subsequent bars, you can at least, no, I'm not going to be adding on this, and I'm certainly not going to try to short after such quality bars because that's not working today. Even if this were way above, let's look at Apple today. Even if the quality bars, look at what happened with Apple. This is my power play, by the way, right? Surge off of the 200. That's the power play. That's the one you never really want to miss, right? But look at what happens here. Before that green, look at what happens. Boom. Now you're pretty elevated. Under normal circumstances, this has a high degree of follow through. It's eliminated a decent amount of green work all in one fell swoop. So even if there was a little trickling back to the upside, boom, that's very, very prevalent. But no, not today. That's all of that red gets erased and a power move to the upside. And you go higher. Now, if you wanted to try a short in this market environment way up in positive territory, you've got to limit them now to very, very low risk, little bar plays. All right. This is your risk. You're going to go under this green if you want to try it. And if this risk is acceptable to you, this is like maybe 40 cents. For a $300 stock, 40 cents is incredibly low. All right. Now, I need you focused on finding those types of plays. All right. If you're going to be fighting the power, because getting out, you lose 40 cents, you can get that back in a heartbeat. There's the move down. But if you've got power, to the left, don't expect this. That's more prevalent in the market before. But in this market, you're not going to, on the odds suggest you're not going to get so much damage anymore. All right. Got to find your moments. Today, there was a moment while I was teaching. I'm trying not to take fewer plays when I'm teaching. There was a moment in Baba. So you got a $200 stop. Guys, you can play high price stops if you become talented at finding low risk moments. Look. Now, this is a $200 stock. And you can say to yourself, you know what? This is right back up to where this thing had trouble here, boom, trouble here, boom. Now we're right back up there again. Now this is going to go either boom or boom again, right? So if it breaks this little bar, I'm going to just try it. That's what trading is about. Finding a moment to try something as long as you can accept the risk. That's all it is. So let's find out what that risk is. High, 219.95, low, 219.85. What? 10 cents? For a 10-cent risk, this is worth a try. All right. Boom. Now you're back again. What is this risk? High, 220. Low, 90. 10 cents again. Here's your risk. So it's not that traders, even with little accounts, can do this if you find your moments. Do you understand what I'm saying, traders? It's not the size of the stock's price. It's more getting the right moment. That's right, Norman. Be choosy. Find those moments. Now, if you can do that, I actually prefer you to go up in price. Listen to me carefully, traders. I prefer that if you can be disciplined enough to limit yourself to those moments, see, then you should go up in price. Your profitability is going to be greater, but you run the risk of your losses being greater too, unless you do what I'm telling you to do. Find your moments. If you get good at finding these moments, I promise you, by going up in price, you're going to make more money. Doesn't mean you can't do it in lower price stocks too. Let's take JD today. Let's say you're like, I don't know, this is a bear one. No, let's go back here. I was covering it this morning. You're like, wow, top and tail bar. We're super far away. This could crack, but this is strong, and this market is just wacky with strength now. But I'm still going to give it a shot as long as my risk is low enough. All right? Now, so I might take the short under this tail, but it doesn't happen. The next bar doesn't happen. Now you're here. And you're saying if red breaks this green, that's a potential short. But let me right now, you got to do it now before the next bar happens. Let me right now check my risk. So here's what you do. You go to that bar and you're like, all right, high is 19. Let's call it 20. And low is 98. All right. So we're talking, 20, we're talking 20 cents. 20 cent risk. Now, you always have to add a few cents to it for slippage, right? So if it's 20 cents, maybe it's going to wind up being 25. So add a little bit to every risk in your mind, because you're sometimes if it's fast moving, you may not get the exact penny above the high with your stop. It might be a penny or two. And the same thing on your entry, it might be a penny or two. So always add a little. So I got about 20 cents. That means, okay, I got about a 25-cent risk. Now, for most of you, is 25 cents okay to risk? Is that okay risk? That's decent risk, right? Guys, listen to me carefully. If you can define your risk before the trade and accept it, then it's worth the try. If the risk to you is small, then it's worth the try. But some of you are getting into trades and then realizing, holy crap, this is a huge risk. My stop's supposed to be below this bar. Oh my God, that's not acceptable. So you're identifying the play and hitting the button, but not with risk first. Risk has to be first before the trade. So I'm showing you how to do it. Here's now, okay, I see my risk now. Now, 25 cents, I'm doing this. Boom, you're in. All right? Now, find your moments. You feel that this might drop? Because we now have a downtrend in effect, drop, rally, new low, rally, maybe new low again. All right, define your risk. On this bar, you're like, okay, this bar didn't break. All right, now it's time to do this one. If that one breaks, but let me see, if that one breaks, you got to do it before, not wait and do it, then figure out the risk. You got to do it before. You got to say, let me check my risk here. Let me see. High is 54. All right. Low is 41. We're talking, let's call it 15 cents. There's 15-cent risk. All right. That's even smaller than the 25 you had above. And boom, you're in. Now,